You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. And where can you find all of that exciting content, including over 400 archived hours of this program, the Option Block? We'll surf on over to the flagship, the mothership, theoptionsinsider.com. Click on that radio network tab at the top of the page, and you're off to the races. Of course, folks, you can also surf on over to iTunes or to Stitcher or to AHA Mobile or to TuneIn or to wherever you like to find your favorite podcast programs, or just grab that RSS feed from our site, and you can put it into any podcatcher you like. And if all of that is too much work, just go to the iTunes Store or the Google Play Store and grab our mobile app, even the Amazon Kindle Fire Store, and you can just build all of your own playlists, stream and download till your heart's content, and then send us your questions, your comments. We'd love to hear from you guys as well. And joining me on the old program today, starting off with the man of many hats and watches, you know him, you love him as the Viceroy, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome to the old program.
Mark, good to be here today. Starting to sound like a broken record, but the markets were reasonably quiet today. Little activity in a couple names, little activity in the euro, and a lot of activity in VIX on our desk, ironically. A lot of people buying longer dated 16 and 18 strike calls. So a little bet on the fact that this quiet period isn't going to last going into the next few months.
Yeah, we may be winding down. Well, they can't all be 1% days like we had at the beginning of the year, but looks like some people out in VIX land at least wagering that we may be returning to those days pretty soon. We are also joined by Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old program, sir.
Always happy to be here. Excited about the upcoming potential moves in the market. They might do something.
Yes, other than the languid upward move we had today. Speaking of languid, we are also joined by the Rock Lobster himself. He of Maine fame, also Option Pit fame, Mr. Andrew Giovinazzi. Welcome back to the old program, sir.
It is good to be here. It is good to be back on an Option Insider Network radio program show. It almost feels like it's been hours since I've been on a show.
It's been at least 3 hours, right? At least 3 hours.
I miss it.
I know you do. It's in your blood now. All right, and with the gang all assembled, listeners, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. This is, of course, the portion of the program where we break down the day that was. From a broad market perspective, not really much of a day overall. Most of the major indices up slightly, fractionally on the day, about 0.25%, pretty much across the board for the S&P, the Qs, and the Dow. VIX cash, of course, ticking down a wee bit down to hovering right around the 14 handle. Of course, that's a bit higher than when we were talking about it last week, and we were wagering about whether we were going to see an 11 or 12 handle very shortly. Now back in the 14 range. Since we're in VIX land and Alex invoked VIX, maybe we'll start there. Mr. Andrew, what caught your eye in today's activity, and what you making out there in good old VIX cash land, and what are you making of all the activity out there?
The last real thing is, I feel like there's like the vestiges of volatility left in the market. They're not letting it go. We still have pretty serious future premium relative for VIX, meaning like those March futures are trading fairly heavily, fairly high above the cash, but those premiums are shrinking. They shrank yesterday. We had VIX cash up and actually VIX futures down, and today we had VIX cash and futures both down. So the risk premium seems to be leaking out right in front of non-farm payrolls, and we'll see if it continues to leak out. That's basically what I see happening. Wouldn't surprise me if the VIX was trading a little lower tomorrow. So there's not a lot, at least right now, to drive the market one way or another. So generally, realize vol goes down, the VIX goes down. It just takes a little while. But that's where we are.
And Mr. Viceroy, same question for you. You mentioned seeing a lot of VIX going up on the upside call range. Give us a little more info on that, as well as what else caught your eye over there at OX today.
Yeah, a couple things. But what the desk saw today was people selling shorter dated VIX and then buying out 3 and 4 months in the 16 and 18 strikes. So obviously that seems to indicate they're looking for a spike in vol, but kind of near term looking for the same trading range market. And I looked at my watch list today, and that's stocks. As soon as I said that, I know some people perked. But the only really thing that was moving today was the biotechs, obviously on the AbbVie purchase. The only other stock that really moved on my watch list today was Amazon, bumping up against 390. And I know I like Amazon. I bring it up a lot, but it is up 100 points off its low prior to the earnings. And then I guess Uncle Mike is going to want to talk about Apple. Apple kind of had one of its worst days in a long time today, but I'll leave that for Mike to opine on.
Yes, people actually do take profits out there in Apple. Who'd have thunk it? It seems like they just keep banking money in there, keep banking dollars in Apple, and it rallies higher. Uncle Mike, was that you driving all that profit taken today?
Not today. No, I think that it's got to have a down day every now and then, I suppose. And so I think that, like we had talked about on Monday's show, the big thing for Apple that could drive it will be what's going on next week. I don't really see Apple getting a lot of macro risk for the announcements tomorrow that we have with non-farm, but I think next week's going to be the time where we could see some movement for better or for worse with Apple.
And aside from the Apple sell-off, what else caught your eye in today's activity, sir?
It was a toothpick day for me. I had to put toothpicks under my eyelids to keep myself awake. In looking at it, just looking at the stocks, I'm going down my stock watch list, so to speak. Not the biggest mover, so to speak, would be XLE. It did have a little bit of a down day with oil. Oil had a 1% down day as well. So we're slightly down in the energy world, although natural gas did have a little bit of a run up today at a little 2.5%. Nothing too much to write home about. The only other name of note that kind of caught my eye a little bit was the Golden Arches. McDonald's is down 1%. It's been having a nice little rally recently, and it's pulled back a little bit. So with that, not a whole lot. The fact that I'm talking about McDonald's going down 1% shows how slow the market was today in general for me.
Yeah, it wasn't a mega mover day across the board. You mentioned McDonald's, another broad, big name that reported today before the bell. McDonald's, of course, is selling off, but Costco, of course, had earnings today, and they're actually up about $4 or so on the day. So the street liking what they heard out of Costco. I guess things are good in the big box retail land, if not so much in the land of the green shakes and the tasty, ever so tasty fries. And of course, you mentioned the Texas tea, the black stuff. Having another rough day today. The CEO of Exxon coming out and actually not talking up oil, but talking up some oil vol, actually talking down oil a little bit today. He came out and said, I believe on CNBC today, said there's potential for there to be future pressure on the market for a period of time, which kind of duh, I think you can say to that. What I thought was interesting about that, too, is that he said, I think people kind of need to settle in for is likely to be a bit of a volatile period. I think people need to settle in for what may be volatility around this level that we're at. And of course, we are seeing that in the marketplace. He's a little bit late to the party. We have seen quite a bit of oil volatility over the past few months. It actually has kind of come off from its peaks of late, but still interesting to see the CEOs coming out and kind of at least admitting what we're already seeing going on in the marketplace. Andrew, did this surprise you at all that the CEO of Exxon will come out and say, hey, we're going to see some oil vol in them thar hills going forward?
You know, I think that guy, his position is so hugely lofty that he doesn't even know when there's volatility in the oil market.
Well, it took him about 5-6 months to catch up to it, right?
If the 50% move in oil prices doesn't get his attention, I don't really know what will. I don't know what to say to that. That could very well be the bottom of oil volatility if it's finally getting around that he's noticing it.
It's starting to impact his bottom line now, so now he notices.
So, wait a minute, what happened to the price of this stuff? You know, he's busy being a CEO and trying to work some deal with, Kazakhstan, and it's, I don't know. I would think, as the CEO of the biggest oil company on the planet, you'd be a little more locked into oil prices. But hey. He's like, well, that volatility could still be around for a while. And I don't think it'll be as high as it was before. I don't know if we're going to get another 50% drop, but if we run out of storage capacity, maybe we will. So that's, you could certainly see you could always see some short-term ugliness if they don't have anywhere to put that stuff.
And, these guys, they're blasting out 6 month, a year, or longer future sometimes. So he's been insulated in his defense. He was selling good prices for a long time. And only now is that starting to come home to him. Hey, these futures I'm writing now, they're not as good as they were 6 months ago. What's up there? And so now he's starting to notice it, whereas maybe for the last few months, he's kind of been, doing whatever they do up there, except watching the price of crude drop precipitously over the past few months. That's why I found that quote interesting. Not the fact that he's referenced volatility, of course, but also the fact that he's, shall we say, a wee bit late to the old party. On the earnings front, not a heck of a lot really cooking anymore, except for good old Demand Media, name we talked about a few times in the old odd block in the past. They've had some action. They're, of course, a $5 stock now, so not a lot really to expect out of them. They moved about a dime or so today. In today's session, about another 15 cents in the old after hours, and that's pretty much market expecting about anywhere about 50 odd cents or so. So we'll see if they have a little bit more oomph left for them in the old marketplace. Meanwhile, we're going to keep on rolling right on to our next segment. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the odd block portion of the show where we just we look at the funky, the weird, and the strange option, and I guess sometimes head-scratching activity that comes pouring through. So anyway, we are going to start with TMUS, that's T-Mobile US. Was up 25 cents today to 32.92. And T-Mobile is on a bit of a tear recently, trading near, the upper end of the range. It's made a nice little move as most of these telecom stocks have done okay, but I think T-Mobile has done a little bit better than most lately. Low of the year trading around 24.26, and that was just not very. That was in the middle of December, so pretty big move for a telecom stock. And I think this particular customer benefited. Well, all I can say is quite a bit from it. So I saw a spread go up March 30, May 33. Net, it went up for about $1.02 now, but the ratio was 4,000 by 8,000. So the trader looks like the open interest on the March 30s was pretty high. So it looks like they're closing the March 30s and buying the May 33s for a slight debit. What we usually call this is a house money roll. And the idea is they're getting rid of their March 30s, which I think they made a tremendous amount of money on. They sold them for around $2.70, which at the time was about a dime over parity. And then they paid up for the May 33s. So this is a case of keeping the party going. There was extra volume as well on these strikes, as the May options actually traded a little bit more. Let's see, I'm looking at the total volume today is just over 10,000 contracts on open interest of 800. So somebody had their happy on for T-Mobile today. And again, the March 30s, the open interest there is around 9,700 with 5,000 trading. So I guess the bottom line is this customer looks like they're only about halfway out of the open interest on the March 30s, and they might have more to do. So, with 2 weeks to go, probably see them closing the balance of the 30s and moving into the May 33s. So all you can say is that's a pretty nice looking trade, and we'll keep an eye and see if T-Mobile can continue to wind its way northward. All right, now here's another one we have. New to the program, I think T-Mobile we might have covered once or twice. This I believe is definitely new to the program. CSIQ, Canadian Solar Inc., was up 285 to 3303 today, so it's almost that was close to a 10% gain. The whole solar industry is taking off. I mean, if the S&P 500 is up, 1% or 2% maybe for the year, not very much. But if you look at solar stocks, they're up huge. CSIQ, I am looking at it right now, is up a giant amount for the year so far. I think it's somewhere on the order of 25% or more. Well, let's just put it this way. It's actually more like 50%. In the middle of January, it was trading $20, and it gapped up to $34.60 today. So a giant move, more on the order of a 50% move when the S&P 500 wasn't doing anything. So the story with the solar stocks, as oil tanked, so did the solar stocks. The high of the year in this name was just over $42. So quite a move in this stock. And today, what did we see here? I saw some April 20 calls going up for $12.30, a 300 lot. And you say, well, Andrew, is that really odd paper? Well, what the customer was doing is they're finally taking this moment to close their longs. 300 traded, but there's 500 open on the April 20s. So as good as it is for this particular customer, actually I take that back, there's 1,900 open on the April 20s. They still have more that they can sell. And clearly with the options in double digits, I can only speculate on how much they made on this trade, but it was probably quite a lot. But they have more to go. So clearly the trader doesn't think the run in the solar stocks are done. Maybe now there was some news here about, the Chinese are supposedly now going to solar and going to start using solar instead of coal and some of all this other stuff. And I guess they're buying up solar panels, and that's lit a fire under solar stocks. And a lot of these economies, they save money by not spending it on oil, so I guess they're going to take their dollars and buy solar panels. So that seems to be the narrative. And for right now, for CSIQ and this trader, they're very happy. And it looks like they're waiting for a little bit more upside in this one. And last but not least, we have INCY, INCY Corp. Just your average biotechnology stock. Doesn't really have a whole lot of earnings, but it has a big stock price. Trading $91.81 today, up $3.90. Most likely the reason for the rally was a buyout of another biotechnology company. It seems like they all get taken out in the $250 range. So right now, INCY Corp, just because it's so much fun to read their descriptions, it's a biopharmaceutical company focused on the discovery, development, and commercialization of small molecule drugs to treat serious unmet medical needs. It just sounds like your average generic biotechnology company. That's not stopping it, though, from having a range this year from 50 to 91 bucks, essentially. So the company has a little positive earnings, about flat, but really today, this was all about some out-of-the-money puts. Again, I just find this paper, it's a biotech, so we have to do the odd paper, and it was the June 52.5 puts traded for 30 cents, 200 times. Again, it was a slow day, but what struck me as funny is, okay, you sell the June 52 puts. They probably sold them when the underlying was, let's say, maybe 60 bucks, 70 bucks. And the market on them today was 0.30. So when they buy the 200 back, they just go in and pay 30 cents for the 200. They don't try bidding a dime. They don't try bidding a nickel. They just pay 30 cents and they're done with it. So they probably could have saved half of their 30 cents or 15 cents 200 times by just sticking a bid in and seeing if they're getting filled, because they are $50 out of the money after all. So
they should use that walk limit over there at OX. That would have been good.
Yeah, use the OX walk limit. Use something. But on the market 0.30 and you just pay 30 on the 200 and they're $50 out of the money. I don't know. Sometimes the odd block is just odd fills, and I don't understand why they at least didn't try to save a dime or 15 cents or their commission on that trade. Maybe they made so much money they just don't care. But I would have tried at least for 15 cents. That's a head scratching close. It most likely was an excellent close because the stock is much higher, but just a bizarre, it looks just like a strange transaction to me. Somebody not even trying to save themselves any money. So, an interesting, some closes today. It was kind of a tough day for volume anyway. It didn't look like a very busy day. So the odd block wasn't as odd as it normally would be today. So, and that should do it for the odd block. And we're going to roll right into I believe, Alex's favorite show, the part of the show where the man of the best and brightest colored hats talks about the newest goodies from OX. It is time for the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that music means it's time once again for the Express Block, the portion of the show where the Viceroy dons his fanciest of fancy caps and perhaps, if no one's looking, a nice smartwatch or two, and takes us behind the scenes into the realm known as Options Express by Charles Schwab. Talk a little bit of tech, talk a little bit of education, talk a little bit of what's trading on the old trading desk, some customer questions, some new tools, some new platforms, all sorts of cool stuff. So, Mr. Viceroy, what's on the docket for today's tour, sir?
So we're going to do a little OX and a little Schwab. And let me remind everyone, Options Express and Charles Schwab are separate but affiliated companies. One of the great resources that exist at OX that we've talked a lot about lately has been the virtual trade account. And I know I touch on it periodically, but I want to spend a couple minutes in it again, because every time I do touch on it, it sets off a slew of emails, which is great that people have interest in it. But Options Express hosts a paper trading or virtual trading platform. You don't have to put any money in the account. In fact, you get to play with virtual money, and if you blow out, you can add more virtual money. But come to the site, click on the virtual trade tab. A couple questions that came in after I mentioned it last time is, can I do flies? Can I do condors? Do I get to do trailing stops, the all-in-one trade ticket? Yep, it's all there in virtual. Now, some of the idea generation tools like the Hub are not available in virtual. And that has to do with qualifying customers and recommendations. But if you want to come in and you've heard an idea on the show, and, Mark frequently talks about trading a broken wing butterfly, and you want to simulate the trade, do a virtual trade, come on in, open a virtual account, put some virtual money in it. You don't need any real money, but a very cool tool. Another tool I want to talk about on the Schwab side, and the reason I want to talk about this is it's a topic that's near to my heart because they brought cake in today, and cake is something that is always near to my heart. But the mobile platform, the Schwab mobile platform, has had in excess of 1 million downloads. So there are over 1 million versions of the mobile platform sitting on phones, sitting on iPads, sitting on tablets. And I know we debate a lot on the show about the future of mobile and how people will use it and how robust the mobile platform is. But mobile is clearly the direction of the future. If I look at the landscape of our competition, they're doing the same things. They're spending lots of money on mobile to make it a robust and a satisfying experience. If you are a Schwab customer and you haven't downloaded the mobile platform, if you are a little reluctant to use mobile, then start using it for quotes. Start using it for price discovery. Start using it to look for credit spreads in the Idea Hub. And if you're reluctant to trade off the mobile platform, at least use it to sort of scan and look at what's going on in the market. And then if you want to trade on the desktop or the laptop, obviously you can. But 1 million mobile downloads. Kudos to the mobile team, Anoop and his crew, but hitting the million point.
Like I said before, that is impressive. As someone who has an app out there in all the different stores, 1 million downloads is nothing to sneeze at, sir. So kudos to the OX crew. And, of course, to find out more information about all that cool stuff Alex was just talking about, surf on over to optionsexpress.com. While you're there, tell them we sent you. They'll love to hear it. And, of course, it's Thursday. That means it's time for my own personal favorite portion of the show. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill by now. This is the Mail Block, the portion of the show where you guys get your questions and comments answered and discussed and debated here on the old program. No shortage of ways for you guys to do just that, including finding our website feedback form. A lot of you guys like to use that and send your questions and comments that way. Post a comment on the site, on an article, or on the show notes. We'll find it there as well. Hit us up on email, questions@theoptionsinsider.com, or via social media, twitter.com/options, facebook.com/theoptionsinsider, and StockTwits. We are Options Insider on StockTwits. So no shortage of ways for you guys to hit us up, and a lot of you have done just that. Let's see, where do we want to start today? A lot of good questions coming into the old mail block. Let's see, maybe we'll start with this one. This is an interesting one and something we touched on before here on the show. This question comes from Alejandro Vergoza. I hope I'm pronouncing that correctly. And he writes, a very simple question, but very straightforward. He writes, when is it right to use options and when is it right to use the stock instead? Now, obviously, we are an options-oriented show, so we tend to fall in the options camp quite frequently here on the program. In fact, I think I probably can speak for the entire panel when I say for the lion's share of use cases in the financial markets, we tend to favor options for all the reasons we've cited on the 400 plus episodes of this program. Options are adaptable. They're immutable to whatever your needs are in the marketplace. So if you want to be bearish on an underlying, you can do that using options with a limited outlay and taking advantage of a lot of leverage. If you want to spec on volatility and do all sorts of other things, collect time decay, all the things we talked about many times, generate income, you can do all of that using options. So in a lot of these scenarios, we tend to fall back on options because you can mitigate your risk. You can do all the great things we talked about using options, and it's so adaptable. If you want to create a stock, you can do it. You can create a stock using a combo, using a synthetic. You can do so many different things using options and replicate pretty much exactly what you can do in the underlying. But this is, like I said, this is a good question because we do get this every now and then. When should you use stock? And the answer I always give, and maybe Mike and Alex, you may have your own answers. The answer I always give to that question is essentially in these proverbial scenarios people always throw at us where they say, well, what if you knew that the stock was going to fall out of bed 30%, tomorrow? What would you do? What would you trade? And in that scenario, I would say that's a perfect scenario where you might want to sell the stock. Or you think, what if you knew Apple was going to rally to 200 tomorrow? What should you do? Well, that's a great scenario to buy the stock in, especially if it's already happening and this market's moving, it's going crazy, things are crazy. You want to just get in. You want to get in. That's a perfect scenario. You know exactly what you're going to get with that. You have a delta of 1 or 100, depending on how you view it, and you know what you're going to get with that. So that's a perfect scenario. But other than that, most other scenarios, I tend to fall back on the old options. Maybe Uncle Mike, we'll start with you on this one. You may be a little bit more stock focused than me because you do work with a lot of retail clients there who do like to own a lot of stock. So in your mind, what are the scenarios where you say, okay, let's use stock, and what are the scenarios where you say, okay, let's use options?
Okay, a couple of them. Right now, probably my favorite stock play I'm in, so to speak, is XLE. And the reason that I'm just going long underlying on XLE, it's funny, a lot of clients, when I would email them this idea and they'd hear me talk about this on the show, it was hilarious, some of the responses that I would got. Holy options, what are you thinking? Not doing an option or buying underlying? Who is this guy? Or something, you'd hear something like that. My belief on XLE is that in time, it's going to go up. And when it's going to come up, I don't know. But if it goes down further, I'd probably buy more of it, quite honestly. So XLE is a situation to where it's an ETF that tracks energy stocks. I believe they're going to go up in time, but just not able to put my finger on when. And so I'm not comfortable buying a leap per se, because I really don't want to take a position in oil volatility. Maybe the Exxon CEO can relate with me on that one. But I think that if you're patient and are willing to wait and ride it out, at times buy and hold can be a good thing. Now, some other scenarios where I think it's good to buy underlying and not options. I talk about on the show how I do protective puts on underlyings with which I own, collars, things like that. But another scenario is at RCM, we have I don't know if you want to call it a fund, but we have a grouping of stocks that we put clients in that we refer to as the strategic night. It's a grouping of probably maybe 30 to 35 stocks with which we've done plenty of research on. We have a technical opinion, a fundamental opinion, and our IPC, our investment policy committee, goes through this on a weekly basis just to determine if it's still a good thing to be in a certain stock or get out of one, that type of thing. In that scenario, they don't necessarily have a specific time frame, like by the end of the month, the end of the week, the end of 3 months. There isn't one. So with that, if you're looking to do something with which you don't have a specific time frame involved and you have a bullish or bearish bias on it, I think that's another scenario to use the underlying. Now, we do have what we refer to as the hedged strategic night as well. That's where I come in on it, to where we will buy put options on SPY as a means of hedging it. Now, granted, we're hedging a market, and it is a basket of stocks, but we make clients aware of that, and they understand that we're hedging against a market downturn, not necessarily a stock downturn in those 30 to 35 stocks. But I think that to answer the question, I think that's another scenario with which it does make sense to own underlying. Another scenario would be if you all of a sudden, let's say that, maybe not all of a sudden, but let's say that you were getting in on an IPO of a big company, and the company turns into Amazon, Apple, or something along those lines. And if you sell the underlying, then you're going to take on a big tax burden. That would be another time to own underlying. Final scenario with which I could think of where I would want to own stock would be, as an example, I have a client that does some very frequent trading. I don't trade for his account. He trades on his own, but occasionally what he'll like to do, if he wants to balance out some positions and he needs a few deltas here and there to keep his positions at the delta levels with which he wants to, he'll just buy a few shares of underlying just to balance it out. Instead of using options, he'll just buy a few shares of underlying because it's more convenient for him, and it can satisfy the need easier than trying to buy a deep in the money call or a deep in the money put. Whatever he's looking to do, he might just buy or sell some underlying right there off the bat. Final scenario with which, I guess I just said that a second ago, but final scenario with which I would think that underlying would make more sense to do than buying an option would be, let's say that you want to do some type of an estate plan, and your client has a lot of money in a non-qualified account, meaning it's not an IRA or anything like that, does not qualify for any tax treatment. And you want to pass money on, you want to have some upside to the market, and you want to pass money on without taking on any capital gains. Well, one thing you could do in theory, and I'm oversimplifying this, would be to actually buy, let's just say SPY in theory, and SPY goes higher and higher and higher and higher. And then upon the death of your client, when the client expires, hopefully not worthless, then the stock can be passed on at a stepped up rate. So in other words, let's say someone bought SPY at 100 and they died when SPY was at 210. Their heirs would get SPY at a cost basis of 210. Whereas if you're using options the entire time in a non-qualified account, you're going to be paying taxes on it on the way up. Now, yes, you're going to have dividends that you're going to be paying taxes on the way up. You're going to be having other things with which to deal with, but that is another potential strategy. And I'm oversimplifying this to the nth degree on, just so you know, but that's another way with which you could have some type of strategy where underlying could be favorable. So those are my scenarios just off the top of my head where I think underlying does make a lot of sense.
So you're officially off the show now, sir, because you pretty much do nothing but trade stock. That's what you're saying to us.
Yeah, no, not quite.
All right, well said, sir. A lot of good scenarios there to mull over. Mr. Viceroy, anything you'd like to add to that mix, sir?
Mike did a terrific job of covering it, but I'm going to make 3 comments. Mike raised issues of taxes and things like that. Look, in a world where I have stock and options, almost anything you can do in the stock market, I can do better in options. And I can do 3-year buy and hold with a Leap synthetic that frees up a lot of money. Now, money doesn't earn anything right now, but I can do it better. I can adjust. I can risk manage. 2 other scenarios if I want to vote. If for some reason I'm a large stockholder and I want to influence what's going on in the board or the proxy, then the vote of stock has some value. And interesting enough, you'll see that in the options market. You'll see a mispricing. It's a very rare event. But if the vote is worth something, there's a takeover or something going on, then I want to be in stock. The third scenario, and this is the one that to me is the sorest point, is if I have to trade after hours. I have to get the stock, and it's 10 o'clock at night, and I got to go into an after-hours session, or I've got to go to London to get it. For many years, I consulted on a portfolio, and sometimes we had to respond to early exercise where we calculated the probability of early exercise, and we weren't always right, but we'd want to adjust in the after hours market. But to Mike's point, a lot of the reasons you want to own stock is not the performance issue, because Mike, myself, Andrew, we can all beat the stock market with options. We know how to do that. It's when you get into the details of taxes and things like that there are very material differences, and Mike did a great job of highlighting those.
That's a good point about the after hours with stock. I neglected to bring that up, and I'm already smacking my head that I didn't say that at the top of it, because that's a favorite refrain of mine, a favorite question. You'll be excited about this, Alex. We go down to the OIC conference every year, and I do our big radio palooza down there. And I always ask about that topic, but I kind of have shrugged it off in recent years because it doesn't seem like there's much traction there. But I decided I'm going to make it another focal point of our conversations this year down there. So I'll make sure I put that question to every CEO of every brokerage firm, every trading firm that I talk to, and see if I can get some sort of assessment of where we stand on that issue, because I'm with you. It is kind of ridiculous that we don't have that option, pun intended, to do it around days like events like earnings and things like that. It's foolish that you have to go to the underlying and do that instead and not get the options. It's quite ridiculous. Uncle Mike, you want to add anything about liquidity in there? I can hear your gears working over the Skype connection.
Yeah, final thing with which I would add to that is, if let's say that the option is at 10 cents by 80 cents or something like that, and it's just not a liquid option, but you really have you have a sentiment on the stock with which you want to use, that would be another scenario where I think a lot of times the stock could be a better option for you.
Stock could be a better option. I like it. Maybe that should be our title. Offend all of our listeners in one fell swoop. Since we have a related question here from Jay, we might as well dive into this one too. This one is, like I said, this is that proverbial scenario everyone likes to ask. If the market is really falling out of bed, what are some good strategies to take advantage of that movement while also minimizing option decay? Well, 2 points here. First off is the one I just mentioned. Stock is not a bad option, a pun intended, in that scenario, particularly if you're coming in, you're looking at something and wow, things are really falling out of bed. If you have stock, you can get into it at a reasonably decent price, maybe better than the options. Go for it. And the second thing that this question is kind of a bit of an interesting one, because if the market's really falling out of bed, like you allude to in your question, decay is not going to be your problem. You're not going to be worrying. If you go out and just do the most basic thing, if you go buy in at the money or near out of the money, put on whatever underlying it is that's falling out of the bed, or if it's the market, whatever the case may be, you're not going to be seeing any decay in that option. Volatility is going to be exploding. Everything is going to be off to the races. You're going to be gaining premium in that option, not losing it. So if it's like you lay out here, a very near-term scenario where the market's just falling out of bed, then almost any bearish strategy you can come up with, I don't think you're really going to be too hurt by premium, unless you do something crazy like do a crazy ratio vertical 1/5 or something like that, where you blow through that short strike. Then you'll be regretting you're doing that. But other than that, if anything that's not crazy net short contracts that's bearish in this scenario, I think you'll be happy with. Uncle Mike, what do you have to say here for our friend Mr. J? This is a scenario where you're gonna dive into the stock and get short?
Probably not. I just buy a bunch of puts and enjoy the fact that the market falls out of bed like you want to, and that's probably how I would play it if that were my sentiment.
Yeah, I mean, you're not seeing much decay in those options that day. I'm just going to go out on a limb and say that's not really going to be your primary concern there, Mr.
And the old cliche is the market takes the escalator up and the elevator down. So not always the case, but a lot of times that's how I view it. And if I'm ever really bearish, I will. I don't know what I would do, actually, because I don't think I've ever been really bearish. So anyway, never mind. Next question.
Never once in your life have you been bearish. I like it. All right, Mr. Vicer, anything to add to that, or want to just keep on rolling to the next one?
Let's roll.
Okay, we got a few more minutes to see if we can squeeze in a few more. This one comes from Fred. He writes, is there a problem in the options market with novice options traders not understanding the risks they are taking? Do you think that will lead to regulatory action down the road? We've touched on this a few times on the show in the past there, Fred. Kind of the headline risk that we see in the options and derivatives markets, because very rarely do you see a positive headline in any sort of broad financial or general media when it comes to options and indeed derivatives. It's always They're terrible. They're risky. They're going to blow out your grandmother. The New York Times wrote a profile piece on options and retail traders about a year and a half ago or so, and it pretty much was that exact thing. It pretty much said these are the worst products ever. They're going to take all your money. Don't touch them. They cited some very obscure, I think it was Norwegian studies that I and no one else I've met in the business had ever heard of in order to back up their claims. So this has happened quite a bit here, Fred, that people are beating this drum and saying exactly what you're saying, that novice options traders don't understand. And that's why we spend a lot of time on a program like this, walking people through the basics, the education. And that's why guys like Alex and the team over at OX spend a lot of time doing these seminars. They don't just want to go to Boca in Florida, although I'm sure that's a big driver for it. They also want to go out there and educate the masses. That's why the industry spends so much money. That's why the SIBO has the Options Institute. That's why there's the Options Industry Council. Everyone in this business knows there is a huge perception issue as well as a risk issue with these products if they're not handled correctly. And so they spend a lot of time, a lot of effort, probably far more than you're going to see stock educators out there. You're going to see it on the option side, definitely. And so people are aware of that, and they've been trying to act on that for a long time. Will that lead to regulatory action? Well, it hasn't really so far, at least nothing dramatic. We've seen some things, and the SEC, this is a much longer conversation, but the SEC is for the most part has been very slow to act when it comes to options for a variety of reasons. Stock is their primary purview. Options are a secondary purview. They don't really understand the product very well. There are specialized regulators like FINRA and others, but still they're slow to act. And they've done some things in the past that they thought would try to help retail, like forcing penny pricing on the options market, whether they needed it or not. And that they've had a lot of unintended consequences as a result of that. So it makes them very slow to act, very slow to approve new product in the option space because they don't really want to hurt the retail investor. So they have good intentions, just their actions are somewhat less than I think a lot of people in the industry would expect. But at least so far, we haven't seen the massive overall crackdown on options firms that your question would imply. We got a few more minutes. I want to make sure, Alex, you've been in the education business for quite some time. I'll just leave it at that. What do you have to say here for our friend Fred? I'm sure you've heard this question once or twice in your day.
Yeah, our uninformed users a problem? Of course they are. I've been teaching options since we did it on Kodak carousels. You either spend the time learning, and education is the key. You mentioned the SIBO's Options Institute. CME just started a Futures Institute. If you're not comfortable, but you want the benefits of what the options market can give you, hedging, go get a guy like Mike. Pay up to get a terrific advisor like Mike. You're either going to spend the time educating or you're going to get a great advisor. But uninformed people, we got all the regulation we need in options. We already have higher suitability requirements. We already have more paperwork than, there's states, as soon as I say this, I'm going to get the emails. There's states where it's easier to buy a firearm than it is to buy an option. You got to do more paperwork and produce more documents. So we got all the regulation we need. Either spend the time and learn, buy a book, take a class, listen to the option block, look at the resources that the insider has, that the brokerage houses have, or go get a guy like Mike and say, look, I want a hedge portfolio. Do it for me. I'll pay a little more.
Uncle Mike, anything to add to that, sir?
First off, I got to compliment Alex. That was probably the best analogy I think I've heard in years. It's easy. Some states it's easier to buy a firearm than it is to buy an option. So I love it. I think that you can't legislate stupidity. As much as we try as a country to do so, you really can't legislate it. Anyone who doesn't wear a seatbelt in a car, in my opinion, is extremely stupid. And we do have laws out there that require you to wear seatbelts, but the reality of it is that people still don't wear seatbelts. Same could be said for helmets on motorcycles, smoking in a restaurant, whatever the case may be. No matter what we do, you can't legislate stupidity. And I agree, there can be a problem of an uninformed user getting into options, but if you go through the channels and go through what most people that have been in the business for years do in terms of getting educated and understanding what you do first, paper trading for 6 months just so you can kind of understand things, or if you're just trading with a small amount of money, then you'll at least be aware of what you're getting into. And if you're not, then feel free to give me a call.
All right, well said, both of you. Unfortunately, that's all the time we have here for the old mail block. And now it's time for us to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we check in with everybody, see what we're all watching for the week to come into the old weekend. Mr. Rock Lobster, we will start with you. What are you keeping an eye on for the rest of this week, sir, into the old weekend?
Non-farm payrolls, see if it really affects any vol, and see if it could keep this party going through 2015. Might as well. What's to keep the market from rallying a little bit more? What the heck? I mean, we hit NASDAQ 5,000. Alex has got his NASDAQ 5,000 hat on again. So, he wants to keep it on for a while.
So that's it. The non-farms tomorrow are the only obstacle to the rest of the year being the big party for the market. So once we're past Friday, off to the races, baby.
If you can find another reason, I just don't see one. I think the Greeks are playing ball. Nobody cares about the Russians, and politics in the U.S. is the same as it's always been. So another good reason to rally. What the heck? I want to see Alex with the 5,000 hat on Twitter, within days. That's what I want to see.
All right. And Mr. Viceroy, what are you watching for the week to come, sir, into the weekend?
Like Andrew, watching non-farm and huge volatility in the European marketplaces today. I know that doesn't get a lot of. It gets me kind of the dork designation, but euro at $1.10, and if you looked at some of the euro bond markets today, based on yield, the German 10-year moved 10% today. The Spanish 10-year moved 5%. The Italian moved 5%. Clearly, the euro is going to parity, in my view. I don't know how long it's going to take, but the European markets were really riled today. They were up, but it's interesting to see the volatility in the European markets. Watching VIX and watching the price of oil as well.
And do you subscribe to Andrew's Pollyanna version of the markets where if we get past non-farms tomorrow, that's it? It's off to the races for the rest of 2015?
I think it could be. I don't think the Greek thing is going as well as many people think. I think there's still a fair probability. Greece didn't worry me a month ago, and Greece now worries me more because I look at what's going on in Europe. I look at what's going on in rates. The joke now is the U.S. 10-year is the high yield. We're the junk. We're 211 and the Spanish is at 130. The Italians are at 130. The Germans are at 0.3. When Draghi announced their version of bond buying today, some of the stuff he's buying is negative yield. So I don't know that the entire Greek situation is as resolved as it sounds.
And Uncle Mike, take us home, sir. What are you watching for the rest of this week? And do you subscribe to Andrew's supremely bullish outlook for the rest of the year, provided we can get past non-farms tomorrow?
Well, I'm supremely bullish no matter what. So I'm already bullish even before non-farms tomorrow, I guess. But that's just me. To add to to go over what Alex and Andrew just said, yes, watching everything with which they had just mentioned. Also watching the S&P to see if we can break out to new highs tomorrow after the non-farm. Also watching the bonds as well. Just TLT, it's right around where it started the year at right now. It's up a little bit, but not too much. So watching that as well. Right now, it seems like we're not expecting anything eventful to happen. And just when you think nothing eventful is going to happen, a lot of times something eventful happens. Now, it could be like what Alex is talking about with what's going on with Greece, or it could be some type of mystery thing that just comes out of nowhere. Time will tell, but I would heed the warning of being prepared for something uneventful, but I am bullish.
That you are, sir. All right, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, see what they're cooking up that may interest you until the next time we can all gather around together on the old All-Star panel. I think we'll start back in that same order with the Rock Lobster. Mr. Rock Lobster, what are you cooking up in the land of the pit that may interest our listeners?
For everybody, we had a great webinar last weekend on, thinking about an income producing trade and generating the position. Anybody that's interested in downloading or seeing that webinar, it was about almost 4 hours. It's broken up into pieces. Surf on over to optionpit.com/events, and you could go, basically buy the webinar and view it for yourself. So we will be announcing another Saturday class, since they're becoming really popular, in the coming weeks.
All right. Thank you for that, Mr. Rock Lobster. And Uncle Mike, same question for you, sir. What is cooking in the land of RCM Wealth Advisors that may interest and or intrigue our listening audience?
March 11th, Minneapolis. The event is coming. Sign up, rcmfutures.com. There's other events in the near future as well. But for right now, that is where we are heading. Check out our website to see if we are coming to a town near you.
And that event is pretty much for CTAs and people perhaps interested in finding a CTA?
CTA is just in managed futures in general. So it's more of a future style event. But if you're in Minneapolis, you will love it.
Okay, so if you're just a futures trader, you can go to that event too. You don't need to be a CTA or anything like that.
Absolutely.
Cool. So check it out, listeners. Head on over to RCM Futures to learn more. All right. And last but not least, Mr. Viceroy, what is cooking in the land of Options Express, live events, and edumacation?
So many events, to quote Andrew, it would make your head spin. But the next two live events, this Saturday, Jimmy Ruzan and the crew will be in Denver, Colorado with their in-person live event. And then a second event in March. Jimmy's got to finally get some good weather. Last week he was in New York. Saturday, March 14th, he's going to be in Phoenix for a live event. And then I'll just showcase a handful more. Tuesday the 10th, I'm doing 2 hub webinars, Hub for Futures at noon Chicago time, and then the conventional hub, the securities options hub, after the close. Wednesday, March 11th, Mike Zaremski is going to do new customer onboarding for our futures customers. Then Nina on the 11th is going to do order entry, advanced order features, and the walk limit, as we talked about for that customer who paid 30 cents. Also on the 11th, she's going to do covered calls in IRA accounts. All the events are free. They're all ahead of the login. Just come to optionsexpress.com and click on the free education tab.
All right, thank you for that, Mr. Viceroy. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.